Alrighty, happy Friday. So we've got a quick day trading recap of all the revenue and expense trades and a few of the swing trade recap. So our first trade of the day was Microsoft, and Microsoft had a nice push up, and we were looking like we were going to break the all-time highs based on the daily chart. So on the daily chart, we had a nice consolidation and a breakout. And I think this breakout should stick for a while, but today just was not the day, especially not the day for same day options. So our first trade of the morning was a bull flag on Microsoft. So we've had a nice push up, and then we started consolidating, and I was saying Microsoft over 230. So I put in a buy stop on the option, and I got filled just over 230. And we were sitting good on the position. We were up $50, $60 because, a 50-cent move on the option contract will be $50. But then Microsoft just had a huge pull down. They're like, we're going to have an inside day today. We're not going to have follow through to the upside. And SPY was rolling over at the same time. So we went long right over here at 230, and my target was about 233. But we got a huge pull down, and then we had a nice push up. I was like, oh, we're sitting good in the position. And then Microsoft had a huge pull down, and we had to take a $50 loss on that option contract right away in the morning. So starting off the day red, never fun. And then later, I was like, oh, but Microsoft still looks so strong. It's doing one of those triangle patterns again where it's getting pinched into a coiled range. I said, Microsoft still looks good over 230. So we went long again over 230. But this time I was like, I'm not playing around with it. I'm not going to give it a dollar stop loss, especially on same day options. I'm not willing to lose another $50. So I gave it a 50-cent stop loss this time, and Microsoft had a nice push up, and then boom, it pulled down again, tagged me out for minus $25 this time because it was a 50-cent stop loss. Luckily, the option didn't get extremely destroyed on that pull down. So Microsoft minus $75 to start the day. And so Microsoft selling off right now too, even while the SPY is pushing up. So tech looks a little bit more weak. So if we look at the account statement, we're still green on the day, but our next trade of the day was on Boeing. So Boeing, BA, was having a nice push up in the morning. Boeing wanted to catch a retracement dip. So we had a nice pull down, a huge push up. So looking at this pull down, this was a bit extended, probably taking this long, but we had a nice push up. I probably should have been buying over here, but that would have only gave like a good minute of profit. So we had a nice healthy retracement down to like the 175.50 level, and I went long right over here at 175.70 in hopes for a nice continuation push up. And we were sitting good on the position. We were up like $40, and then I noticed that the bid was thinning up, and so I wanted to take my profits for a break even or a small gain, and I just wasn't quick enough, or at least Thinkorswim wasn't quick enough. And I couldn't get my order filled, so I just put in a stop order at 174.75. And we got filled at that 174.75, and that was for a annoying expense trade of $65 just on like a 50-cent drop on the stock for me. But that's annoying, but that's the way it goes. So Boeing sold off, then later ripped up and stuff like that. So 2 red trades to start the day, but we didn't give up. So our next trade of the day was SPY, SPY, S&P 500 ETF. SPY was making lower lows on the day, and it was making lower lows, but it wasn't having extended follow through. It wasn't having that clean follow through to the downside straight waterfall sell off. So if you see a stock or an ETF or anything making lower lows but not having huge follow through, you should think, okay, bullish wedge pattern. It means the sellers are getting more and more tired every time we drop, and it's not getting the follow through that they want, and buyers are picking it up every time it drops. So eventually the buyers will overwhelm those sellers and you get a pop. So once we made this lower low and we put in a nice sharp wick, I actually went long on SPY at 348.30. I don't rarely do this, but I had a nice tight risk. I went long at 348.30 and then put a stop just under 348. We got a nice push up, put in a sideways consolidation bull flag. And then once we popped this bull flag, I just took my contract off for just $37. I could have went with a better strike price, a stronger delta, a bigger delta, meaning I make more per dollar move in the ETF or instrument that I'm trading. But I didn't do that. I didn't want to, because when you pay for a higher delta, you can also get clapped if it drops on you. So I kind of wish I would have risked a little bit more, but at the same time, I was very happy with it. And at the same time SPY was going, Disney decided to save our day, save the trading day. So Disney was a great mover today. And we had this demand zone right here between 134 and 134.60. And once we left this demand zone, I missed this first move, but I'm actually kind of glad I did because it dropped again. But I added 135 strike call expiring today right here at 134.66. I added once we went over 135 or this little pivot high, and then we had a huge pull down, and I was actually down like $30 overall in the position, but we held this level. My stop was just under like 134.40, just below this low, or a 5-minute close below that low, because sometimes they like to spike the low and then go up, kind of like Boeing did. And then we actually added another contract once we broke this kind of wedge pattern. Notice how we have lower highs, but at the same time we have higher lows. So right there, that's a valid entry, and especially over a whole number like 135. We got a nice push up, and we actually pulled down. I was like, oh no, this is going to be a false breakout. So I was a weenie, and I took off one of my 3 contracts right there at 135.10 for $2 gain. And then we got a nice push up. This upper wick filled me for $15, and then we had 1 contract left, and we actually sold it at about 136. Oh, and also I actually did have 4 contracts. On Webull I had a 136 strike call, and that call on Disney was $30 into $91 because we almost pretty much nailed the high so far of the day at about 136.60. As we started to pull down, I was thinking I don't want to deal with the decay with the option expiring today. So Disney was a nice solid revenue trade, more than wiping out Microsoft and Boeing. And so day trading profits around $1. But with the swing trades, we're up like $62. And when we go over the swing trades, we're looking at SHLL and ROKU. And so SHLL was, in the game plan to swing trade, and so we swing traded. We dip bought at the old all-time high as support. I did get wiggled out of a lot of my position on the early morning dump, but then SHLL started to push up, and we just took off most of our shares in front at about 38, 39 area, and I'm just holding a stop that's pretty much break even right now. But SHLL looking good, holding support, bouncing. And then our other swing trade that we're working on is ROKU. And ROKU's looking really good. We've just been kind of adding shares as we gone up. I really wish I would have hit it this morning because it did another, monstrous day of 9.7%. On same day options, you can turn like $200 into $2,000 on a move something like this, or at least $200 into like $1,500 based on this type of move. So keep an eye out for ROKU, all-time high breakout. I still have my spreads, $200 target by the end of the year. And also on Disney, we reloaded with actually a put credit spread. And so this is basically like an in-out spread, but I just make money as long as Disney is above 136. So I'm selling the put debit spread. I'm selling it, so it's a credit spread. So I actually want this to go to 0. The more this number drops, the more money I make. So Disney, if by 9/18 it's just above 136, boom, we'll collect the full $47. If Disney starts dropping and closing like daily below 136 or 135, then I'll cut this. Our max risk is actually more than what we can make. Our max risk is $53. However, it's a higher probability trade because you're selling options. And options, when you're selling options, it's a lot easier to make money than when you're buying options. So keep an eye out for those trades. SPY looking good. We might see more and more rip-ups. There may be some corrections in between, but SPY might be starting a new 10-year bull market. So remember, we were saying many months ago in the game plan that stay cautiously bullish on SPY, and look what SPY has done ever since. And we also mentioned this bull flag. We drew a nice arrow, and look, we're right hitting the top of the arrow that I drew just a week or two ago. So stay bullish, hold those shares, don't sell them to anybody, not financial advice, don't get mad at me if SPY goes to 0. And yeah, thanks for tuning in. See ya.